great. Thank you.
Put those on so it looks smarter.
Oh, very good. So yeah, I suppose just a very quick, like 30-second sort of background to the actual project that we're involved in. It's a European Union funded project to encourage greater understanding amongst small businesses, SMEs, so typically less than 250 employees, about blockchain and its applications, and potentially about encouraging some technology spin-outs from some of the university partners involved in the project. The main focus, however, is more just on building the capacity of SMEs, not to really do like blockchain startups or attempt blockchain type businesses, but just to have a better understanding of how blockchain is going to impact on their business going forward, or is likely to impact on their business going forward. So that's kind of where we're coming from. If we maybe start then, just so the company, the name of the company, Peter, is Company with a K.
Yep.
Yeah. I like it. And we're founded in
2000 and I was 10 years old. What was it? 2000. Must be 2012, February 29th. I know I should know.
Yeah. And then, what do you, how do you define the sector?
RegTech.
Sorry, fintech. Yeah, I was going to say financial, fintech. Yeah.
Yeah. So we're the sort of the smaller, well, not the smaller, but the subset of fintech, which we call RegTech. Regulatory technology.
Yeah. Okay. Yeah. Okay. Cool. Yeah.
It's the big small subset.
Yes. And then, so in terms then of just sort of maybe moving on to about sort of the why was sort of blockchain technology considered? What was the problem that it solved?
So I'll give a little background into what we do. Mm-hmm. Primarily, what we've built is a network of connections to business, banking, tax, general, but specifically those government registers. Mm-hmm. Concept being that anyone throughout the world who needs to do AML checks or KYC checks, KYB, particularly business, because we don't do people, mm-hmm. Instead of having to go to the Handelsregister in Germany and Committee's House in the UK and CRO in Ireland and Firmenbuch in Austria and another 200 different ones, each with a different interface, each with a different payment system, each with a different structure, each with different data. All of this stuff we've already handled. So people can come to us for a single point of contact. We aggregate the access, we aggregate all the payments. We've done all the hard work basically, so that people can come to us and say, okay, I need to find out about company XYZ in country ABC.
Yeah.
And we can do all that for them from one space.
Oh, wow. So how do you, I know this, how do you then, so, okay, so then where does the blockchain bit come in?
Yep, you notice I haven't said anything about blockchain.
Yeah.
There's two parts to this. One is that, and the simplest one to understand is the requirements for these checks, these KYC checks and AML checks, needs you to be able to prove that these checks were done at a certain point in time with a certain data source, and you get certain results.
Yes.
Now, the basic level that we do with blockchain is basically we use blockchain to provide that level of proof. So we'll build up a block consisting of a hash version of the request, the response, any documents, a timestamp, and we'll put that on chain. So once it's on chain, it can't be altered, it can't be moved. We know exactly what time it went on there.
Yes.
So that if a regulator now goes to one of our customers and said, okay, we found out that this company you gave a bank account to, for example, actually was engaged in money laundering. Mm-hmm. We need you to prove to us that you did your checks. Mm-hmm. They could maybe hand over log files and PDFs with timestamps scrolled on them and all stuff which isn't proof really at all.
Okay.
Or they can hand over an ID which points onto a blockchain, and there's everything.
Yes.
Not necessarily there. You take the information and compare the hashes or decrypt it or however that's actually done. But the content is locked in sequence. The content is locked in time. And even to the extent that if we use something like certified timestamps, the content is legally verifiable in any European court. And that's the most basic use that we do. So it's really, I call it turning trust into truth. So rather than people having to trust what they're being told, and all of KYB is actually based on trust at the moment, all of it, because the registers are trusting the company to tell them the truth.
Yes.
People like us are trusting the registers to tell us the truth. Not that they wouldn't, but it's still a trust. Our customers are trusting us to tell them what we receive is what we actually received.
Yes.
And the regulators are trusting our customers that what they are telling them with some backup of things which could be arguably defined as proof is actually proof.
Yes.
This takes all of that stuff away. And instead of having to trust these layers, we basically say, no, there's one thing, it's proof. It's proof that you made this request of this company at this time, and you got this response. And
so yes, yeah.
Sorry, and literally no one can argue with it at that point.
But so then, how do you? I think I'm following it so far, that sort of that chain of trust. But they're essentially trusting you to do the work that they are paying you to do in terms of contacting the company's house and so on and so forth.
Yep.
How do you then verify that how do you verify that you've done the work on the blockchain?
So what we want to do is turn this into a sort of more infrastructure thing, where we actually want the registers and the regulators and the customers actually involved as well. So
yes.
So we're building this as an open play. So ideally we could go to, and some of the sort of East European registers are quite up for this because they're very gung-ho. I would say, well, look, can you give us proof that we made this request to you in some fashion that we can refer to on the chain?
Yes.
In our recordings. And we just extend that model out in, inwards. I picture it as a sort of onion skin layer thing. We extend that inwards and outwards. So eventually we, rather than being a trust model, it becomes a truth layer, I was going to say. But yeah, I mean, there's going to be that degree of trust at some point, but also at some point, of course, there you get legalities come into it. So even if a company lies to a register, and the register puts that information in the public domain, that information is still legally true, whether it's correct or not. Yes. So that's where, is trust even relevant at that point? I'm not really sure. Okay. But they'll be found out anyway pretty soon. Yes, but and likewise with yourself, there's still as maybe I'm not there's still an element. You can prove that you requested the documentation, the company's accounts or whatever. Yeah. So that, and you can forward that on to your customer, so they have that level of proof. They're trusting you to have done the actual request, but that exactly. actually the information you found in the request isn't on the blockchain, or is it? So we've had a few models with this. One is that we were going to put the information on there. The issues around that are that not all chains are equal. Some can't handle big payloads, some can't. And the main issue actually is around privacy and information ownership, because someone's paid us for that, to do that service. Yes. They probably don't want that information out there in public, which is perfectly reasonable, and which is why we don't actually do that. Okay. So what we do instead is we keep a copy of the unencrypted or unhashed data. So we build a data structure from the request and the response, which itself can contain hashes. And then we put either a hash or an encrypted version of that on chain.
Okay.
So all anyone looking can see is that it's just gibberish. If it's encrypted, then our customer could give the regulator the decryption key, excuse me, to go with it. If it's hashed, we can give them the original data structure and they can perform the same hash and they can do the comparison. So there's a bit of education required to show how this works, but mathematically, of course, it all works fine.
Okay. Okay, 1 second. I'm just going to grab my script here. Okay, that's so.
That's the first layer of that. Now, what we've built, or building on top of that, is because our customers are, let's say we offer a web and an API. So let's say they're using our API. They can come to us. We'll put a record of the request on chain. That becomes proof that they did that request and got that response. The next phase, which we're working on, is to actually move our API on chain as well, so that people who are operating natively on chain and doing smart contract operations don't need to jump out through some kind of Oracle thing to call our API to then tie everything back together. We can do everything natively on chain. So we wrap our API in smart contracts. Everything just flows through on the same chain. And that then extends, to your point, that extends even the recording of the fact that they made the call in the first place. And we replied, because that is natively on chain as well. And what that brings us is the capability for people doing chain-based funds transfers, people doing things like NFT markets, all that sort of thing. They can meet requirements like the travel rule because they're doing everything on chain, and the actual proof can be handed off because it's just a reference to essentially to a link on the chain. So all those funny little requirements can actually be met, and this can all be done in real time for 99% of the requests. Obviously, there's always going to be bits where that's not quite possible, and a lot of our customers aren't capable of dealing with that level of complexity, let's say, at the moment. But for companies which have grown up on chain and are natively on chain, it's a very natural progression for them.
Yeah. Okay. Yeah. And sort of rough percentages, those companies that are at, let's say, at the more advanced level, are what, 5%, 10%, 1% of your, broadly speaking, what?
Yeah. So there's, I mean, they're probably about 5% of call volume.
Yeah.
There's a lot of them, but they're all very, very small. Obviously,
yes.
Our more traditional customers, there's less of them, but they're very big. They're big banks and they're big banking groups and that sort of thing.
Yes.
But even then, they all profess an interest in blockchain. Who doesn't? You have to these days, otherwise everyone just laughs at you. But how far down the road they are is, it's debatable, let's say. But the beauty of what we're doing is when they get to that point, all the stuff that they've done with us already, which has already been recorded, they can just absorb straight away. So they can, it'll be seamless for them in as much as we can make that possible.
Okay. Okay.
And this whole thing, that whole part of that centers around identity. So the actual basic problem is proving identity, being able to prove that you proved identity, and transfer of that identity to any other parties who are involved in whatever transaction you're doing. So it's really, we're aiming for chain-based transactional KYB. That's our end goal.
Yeah.
And what this does, sorry, I sound like a marketeer, but I'm just a techie. What this does is it gives us, it actually builds up a marketplace for KYB information. Because if you come to me and said, okay, I want to do KYB for this business, I'll pay you for it, I'll pay for the documentation, etc., etc. There's no reason at that point that you can't resell that information. subject to any copyright laws around documentation and that sort of thing. There are niceties to be observed. But in essence, it's information you pay me for. So why can't you go sell that? Why is that information now not worth something to someone else who may have GRC requirements that are less strict than yours, or they can take 6-month-old data rather than week-old data, or whatever this is. So it naturally brings in the creation of a KYC, the KYB information market, because what you've done is tokenize the KYB information just by virtue of actually doing it and storing a representation of it on chain.
Yes. So does that mean then, so let's say then once you do the KYB search on a particular company, for example, and then someone requests the same request for the same company, and it's within the time parameters, you don't have to go and do it again. You already have it on the chain. You can just sell it again.
So right now we would go and do a brand new request. So there's absolutely no question over who owns the data at that point. Even if we had a subsequent request, in the next second, we would still do that, and we have to do that because there are legalities. But there's nothing to stop the original purchaser reselling that information. Okay. So it wouldn't necessarily come to us. I mean, we'd set up to be brutally honest, we'd set up the smart contracts in such a way that we got a tiny slice of resell, because we're losing custom from not doing that. Yeah. But still, that's just the commercial reality. Okay. But there's nothing to stop customer A selling to customer B at all. Yes. Within reason. Yep. Okay. Yes, I get you. Okay, so the technology as it stands at the moment is primarily being used to prove the identity and to prove that the search was done for the identity, but it's not in the sense of the registrars. They're not at the level yet, or probably won't be, about engaging in putting the company registry details into a blockchain. That's some are looking at this, and I have lively debates with them, let's say, over whether that makes any sense at all or not. Okay. I don't think it does. I think that's just a very good way of making a slow, expensive database, when there are much easier, simpler, and less cumbersome ways of making a database, i.e. you buy or you use a free database. But what they should be doing, in my opinion, is actually to do what we're doing. So they should be tracking access to that. They should be tracking the updates to it. They should be tracking the accesses. They should be tracking basically the read operations, the CRUD operations that you would normally have in a database. If those are recorded on chain, then it becomes a lot more interesting, because it's back to the original concept of a ledger, which is changes happening into events. So whether the company has an address at number 1 XYZ Square in London isn't relevant. Particularly, what is interesting is that they move their address at that point in time. And you may be interested in what the address went from or what it went to, but using it, I've never been sold on the concept of using a blockchain as a database. I just don't believe that's a viable use. I don't believe it's a good use. I think you should use a database for a database and use blockchain for what it is, which is an immutable record of things which are happening. That's my opinion, and I know lots of people and lots of good friends of mine who do disagree with that. But interestingly, they all still use databases. Okay. Yes. Okay. So, in terms of, like, say, of the impact or the benefit at the moment for your customers, how would you define that? So, with honesty, the impact on, the impact is minimal. In the sort of, let's call them the proof scenario and the the transaction scenario. Let's go on that. So proof being what I explained first, transaction being on-chain, chained smart contracts. The first one is kind of like an insurance policy. Right now, regulators don't require this level of proof. But there's two reasons for that. If you look at the way the regulations are written, actually, you should have to do this right now. It's just that the regulator doesn't know how to insist that you do this right now, so they can't enforce it. And as they can't enforce it, no one bothers to do it. Yeah. That will change. And we speak to regulators, say, well, look, we're providing this service to our customers. And they go, oh, that's really good. That means we can do these checks easily. We don't have to wait for reams of documentation. It's just one, 32-bit hex value or whatever the proof, whatever form that proof takes. And even more interesting from their point of view, they can actually monitor the market in real time. The market, they can monitor the behavior of the people they're regulating in real time. And actually, and I pointed out to them, if you're part of this, if you're able to monitor what's going on in real time, you can actually intercede in real time as well. So you can do pre-regulation in a transactional basis. And this is where we're going into the transactional stuff. So currently what they're getting is essentially an insurance policy against future regulatory requirements that they need to toughen up on their proof. And also it's an insurance policy against changes to the requirements in general, in terms of what constitutes suitable proof to a regulator or an auditor or law enforcement, anyone who's got a legitimate right to be interested in this sort of thing, that what they claim to have been doing is indeed what they are doing. And that's, I'll be honest, that's kind of a hard sell, because until it becomes a problem, it's never a problem. But having said all that, the fines that are coming in for KYC and AML checks not having been done, and I'm always really cautious when I use my phrasing here, not having been done doesn't actually mean that they weren't done. It means that the person who should have done them can't prove that they did them. And as proof is going to vary, because it's very ill-defined what this proof is, essentially what we're saying to them is, look, as soon as you have a problem, you're going to be really, really grateful that we were doing this. In the same way that as soon as you get fined 6 million euros, you're going to be grateful, you potentially get fined 6 million euros, you're going to be grateful that we are using official sources of live data and not some database that's been cobbled together by us over the last 5 years with information from Lord knows where and Lord knows how old. And so really what we're doing, when we set up Kompany, we were ahead of the regulatory frameworks. And luckily the frameworks caught up with us, because we were reading the wind. And we believe that we're doing the same thing here. We believe that once it's clear to regulators and such like what's possible, they are going to say, okay, well, we want you to do something like this. They won't say we want you to use Kompany's machine, because they'll never ever say that, obviously, and that would be crazy to expect them to. But we do expect them to come out with, we want some kind of blockchain-based proof mechanism that you can say to us, this is exactly what you are claiming is exactly what happened. So they're getting that benefit. The other types, the transactional people, are basically getting the benefit of keeping their business model on chain, being able to do checks that they weren't previously able to do. And it's as much about selling what we already do as it is about selling what the blockchain capabilities are. So a lot of these nice new startup NFT vendors and blockchain-based people, they still think that onboarding is done in a very classical way. So you have a database, you onboard someone, they send you information, which is insane anyway. You're trusting the person that you are trying to vet to not lie to you. Whereas you can go and get the official information and then say to them, this is it. If you disagree with any of this, you're going to have to justify why you're disagreeing with this, because this is the legal truth of the matter. And doing that whole process and putting it in a database, and then when they're ready to start transacting, they can go, okay, yeah, we did your checks. Oh, look, last time we checked was 6 months ago. We need to check you again and go through the process. What they get for using us is actually they get essentially instantaneous onboarding. So that whole time frame, which is always assumed that there's an implicit assumption that this takes months. And the reason it takes months is because people allow it to take months. Can be compressed either into, days or even seconds. And for a lot of very simple transactions, you can do the KYB in seconds. Say you're doing a money transfer between businesses, mm-hmm. and you have to do the VAT checks. You can do both parties AML checks to fulfill that requirement in a sub-second fashion, and you can do it as part of the transaction. So you don't need this onboarding. You don't need to worry about how accurate your data is. And I mean, we can feed updates to the data to you anyway, but still, it opens a whole new avenue and a whole new approach to actually doing these transactions while staying compliant with the regulations. You don't need to act like a dinosaur or a company that up until 20 years ago was running on a mainframe. There's much better ways of doing this stuff now, and it's much more accurate, and it's much faster, and I dare say cheaper.
Okay, excellent. Yeah. Okay. So I'm just kind of thinking now of maybe moving on to talk a little bit just about sort of yourself and your entrepreneurial journey. You're one of the founder you're the founder of the company, Peter, are you?
I'm one of the co-founders.
Uh-huh.
And it's a bit of an odd journey, really. Uh-huh. I spent most of my working life in telecoms, in mobile telecom. And I started working in Vienna about 20-something years ago, when I was, I don't know, late 20s. And I ran into one of the other co-founders who were called Russell Perry. And what we were doing there, we were setting up a brand new 3G. This is when 3G was new. That's how funny this is. A 3G mobile network. And we were basically, so Russell Perry, the co-founder and CEO, he was doing product stuff, product design, and I was doing implementation. So I was basically coding and designing. And we invented a whole bunch of new stuff, like we had SMS-based ticketing and horoscopes and all sorts of stuff. And we even had a thing where you could go and order Coke from a machine in Austria by sending an SMS, and the machine would vomit out a can of Coke and it would get charged to your mobile account. So all quite cool stuff, which incidentally was redone about 3 years later by people who claimed it was the first time it's ever done. There we go. Yeah. And then we basically started, then I left there and I went somewhere else, but then we came back and we kept on bumping into each other off and on over the years. And we actually ended up in South Africa. Now, prior to South Africa, just outside of Joburg, I'd been working at Company's House in the UK, where we basically taken the old mainframe system and redesigned and rebuilt the entirety of the register. So brand new register, brand new technology, brand new everything. And I was doing the design for that. And then once that was in and running and nice and happy, we did a few more changes with changes in the law. And then I ended up going back into telecoms in South Africa, where we're doing a 4G startup this time. And Russell was there as well. And we were just talking over, chewing the fat, as one does with old friends, with some very, very nice South African red wine. And he was telling me about what he'd been doing, which was working for bwin, and some of the issues he had in people wanting to do advertising and that sort of thing, and not being able to validate who these companies were, because they were in Russia or they were in China, or I'm not, it sounds like I'm picking these names out a little bit, I'm just not, or the Netherlands or something, and getting the information getting access to the information, understanding the information with language barriers. All of this was a complete nightmare. And it occurred to us that lots and lots and lots of other industries must have exactly this problem.
Yes.
And especially with sort of globalization coming in, we have, and I was talking to people down in Indonesia who had a Dutch company that wanted, it was a bank. A Dutch company wanted to open an account because they were doing some business down there. They were setting up a branch. But this poor bank, who desperately wanted the trade, couldn't open the account because they couldn't understand A, how to get the documents from the Netherlands, and B, they couldn't read them. And they didn't have anyone who was capable of doing that translation. And even if they did, can you trust translation, et cetera, et cetera. So it occurred to us that what I've been doing at Company's House in the UK, if we built an interface to that. Now, we were very spoiled because Company's House UK is a very simple interface. It's a very nice platform. I say that without bragging or anything. I actually had very little to do with the API side of it. Excuse me. And we figured, well, if we can just replicate that model, we'll do it in Austria because we know people there. We could do it in Germany. We could do it in Ireland. We could do it. If we did that globally, then what we could do is actually allow access for anyone, anywhere to get all this information. That's fine. And the market for that, actually, even at the time, it should be gigantic. Even if it's just trading partners, it needn't be banks or big industrials. It could just be some chappie who's been offered a contract by a firm down the road to build a few houses or put roofs on houses or whatever it is. Still wants to do that check because he's going to have to go to the bank to get a loan to buy the materials, and the bank are going to say, well, you don't have enough money, so how are you going to get this? And so all these checks, even at that low level. So this seemed like a very, very fine idea, especially after lots of wine. And so we just decided to do it. And the vision that we had, and funnily enough, we still have this somewhere. We figured, well, if we got all this, we can look for connections between all these data sets. So if I'm, say, a shareholder of a Estonian company, for example, we should be able to discover that and make that connection within the data. And if there's a sort of hierarchy of connections, a tree of ownership, let's say, we should be able to do that. And we should be able to say, okay, anyone with my name, with my birth date, connected to any company is probably going to be me. And we can actually put an absolute figure on that. So we can say, if it's my name, my birth date, my address, yeah, it's going to be me. If it's a different address, maybe it's 80%, but we can quantize that. So the full company name is 360 Company, and we had this view of having a 360-degree vision of business data for people, but all based on fresh, real-time, efficient information, not aggregated information. And that was really where it all started.
And was this pre-blockchain, or was the blockchain intrinsic to this at the time you had the idea?
No, this was pre-blockchain. We'd done some, I hesitate to call it distributed ledger stuff. Another little thing that Russell and I started off was we built a system to allow remote automatic control of small-scale oil fields. Russell's half American, and he comes from oil country in Tennessee, where there are hundreds and hundreds of little oil fields dotted around. It's just one or two or three little oil wells. And the big problem for the refineries there is they don't know who's got how much oil at what time. So they can't schedule pickups. The whole thing's a complete mess. And you end up with pumps that run when there's no oil going through. You end up with pumps that overfill the tanks. And so we basically built a very distributed system to do this. This is, again, it's nothing to do with blockchain, but some of the underlying principles were there. I don't know why I brought it up, to be honest. But at that point in time, no, I mean, this was 10 years ago, and blockchain was still a glimmer in Craig Wright, if you believe him's eye.
Yeah.
So, but as soon as it came out, and as soon as the hype over just using it as a store of value, then the real uses of it came to, and it occurred to us that we can actually make really good use of this by doing exactly what we currently are.
Okay. Yeah. And so then going back then to let's say the day after the hangover, you've had this idea. How did you get then? That idea still sounds really good. How did you get that idea into a viable company?
So once we finished in South Africa, we went back. I came back to the UK and also went back to Austria, and we basically started some digging. So we looked to see what the potential market size would be. So how many small companies, how many large companies, what the numbers were, and how much the actual overall what was just about being called fintech. This is really at the start of the buzzword era, was worth. And if you read the Gartner reports and that sort of thing, it was a large amount of money. So I figured, well, if we can get the tiniest squidge of that, then that would be quite nice. So we got together with a few other people. We bunged some of our money in, thought, well, let's have a go. Let's give it a try. And actually, we started off with an Austrian company that existed, a partnership. So we had the way the register works in Austria is kind of odd. It's not like Ireland or the UK where you can just pitch up on the web page and do your searching. To do that in Austria, you have to go through a licensed intermediary. And we were lucky enough to find a partner who had an unused license, so we could then use that license. And so there are certain criteria to be met, of course, because you're essentially collecting money on behalf of the Austrian government. You have to meet certain technical requirements and certain corporate requirements. But we got over those hurdles. And so our first two connections were to Austria and to the UK. And yeah, we basically found three other people to be founders with us. We all put in a bit of money. We rented some very, very, very dodgy offices and just kickstarted it really from scratch. We used free software and built it up.
And that's so started in Austria, selling primarily to the Austrian market, but the British and Irish markets.
Yeah, so the biggest market at the time was the Austrian SME market. And the UK market was a tough nut to crack, being based in Austria, and because Company's House is so easy that the honest truth is, if you are just doing within the UK and everything you're going to look for is UK based, then you don't need us. You really don't. We're at our best for cross-border, and I've actually told people, unless you are going to go outside the borders of the UK, don't use us. It's wasting your time and your money. You may as well just use the UK. But the second you go outside the UK, the second you get a European interest or even an Irish interest or anything, or even from a territory like Gibraltar or Jersey, you're going to need it. So the question doesn't become, should I use you? The question becomes, do I need to build two systems, one for the UK and one for the rest of the world? So we started with the Austrian SME market whilst we built up a bit of a base and a following, and then we started to tap into the bit wider. So at this point, we'd expanded our coverage to Germany and most of Europe and Ireland, and we started getting a bit deeper around. So we had really, really good European coverage, and then we could tap into the German markets and the French markets, and just expanded, sort of grew it organically that way. And then, of course, once we had a firm footing, we could go after the larger clients, who at this point the regulations were beginning to catch up. So the regulations about having to use golden source information, and being able to demonstrate that was starting to bite, and people were getting fined. So we got a lot more traction after that.
Okay. And then, so at what was this? Was this still pre-blockchain, or when then did blockchain come into the equation? And if you is the business now totally in a blockchain model, or is it still a significant part on the traditional model?
So the blockchain stuff started coming about 2 years ago for us.
Okay. Mm-hmm.
We were late, to be honest, and we were struggling to find a need. No, that's not true. Let me rephrase that. We wanted to do it, not just for the sake of doing it. Mm-hmm. So we looked around, and we sort of blue skied a bit and said, well, what's the end game? If we do go into blockchain, what's it going to give us? What's the end game? And we ended up with the marketplace that we described before. Mm-hmm. And said, okay, yep, that makes sense. We can do that. And there's a number of ways we can do that, but that has to be blockchain based. It just will not work any other way. But we're not going to go there in one go, because that's not realistic. So how do we get to that point? And then, we just did a bit of reverse engineering, broke it down into the components, and then created what we did. Now, the first implementation was actually on Ethereum. Mm-hmm. But we didn't stick with that. It's still there and it still works, but we don't really like to shout much about it, mainly because of the speed of Ethereum, which is just not there, and it's getting slower and slower and slower and slower. So what we've actually done is we like to be chain agnostic. Mm-hmm. Our view is that, if our customers might say, okay, we want to use Hyperledger, or we want to use Ripple, or we want to use blockchain itself, or BSV, or whatever chain they use, or Flare, or we want to use something which talks to all of them. Our view is that it shouldn't matter which one if they have a particular reason to choose a particular blockchain. I'm always fascinated in why they have that reason, because normally the reasons are entirely bogus and usually incorrect. But fair enough, you're the customer. If you think that makes more sense to have a private chain as opposed to a public chain, when it doesn't, go ahead. That's fine. As far as we're concerned, it makes no difference whatsoever. We have a few, if we can talk to it and put blocks on it, and it can, it understands the concept of a Merkle tree, then fine. If we try and do the smart contracts, it obviously brings in a few more limitations, but again, fine. Not everyone needs a smart contract model, and that's more suited to, as that's targeted at people who are already using smart contracts. That's never going to occur, because they wouldn't be asking us for it in the first place, because they need that themselves. So we're quite agnostic. The one requirement I have is really about speed. When we were thinking of putting the entire payload on chain encrypted, then payload size was an issue, and particularly validation time for large payloads. But speed, for me, speed of block creation is the most important thing, and scalability in that, of course.
Yeah, which kind of sort of preempts also my next question in terms of the key challenges. So it is speed and scalability, and that's if I'm picking up right, that's why you moved away from Ethereum.
Yeah. So what we built was originally because Ethereum was taking up to 2 minutes to validate a new block. We had to build, so we're processing API requests, maybe 100 a second, whatever it is. And we were having to build up a great big Merkle tree of these requests and flush that tree as a block every 2 minutes or something, which we know was, an acceptable flush rate. And mathematically and technically, there's no problem with that. But the issue is, what we wanted to do is give our customers, as soon as absolutely possible, the proof. Ideally, we'd like to give them the proof in terms of either the block ID, which actually is theirs, or the block hash, or whatever constitutes proof. Now, if we're building up a Merkle tree with a 2-minute lag, we can't do that. That means the customer has to come back to us at some point and say, okay, well, you gave me this reference before. I need to know what that actually means in blockchain terms because I've got someone asking. Having said that, that's kind of the safe mechanism to do anyway. Otherwise, we are entirely relying on whichever chain technologies are underlying this will always be able to keep up with our API. And that's not actually that clever a thing to assume. The second I assume that, I'll be proven horribly wrong. And there'll be a huge backlog. And basically our API will slow down. And we can't allow that to happen. So actually, we still do that model. But what a lot of our customers do is they'll send a request in, and then they'll request pretty much immediately the actual proof for that request. So they don't want to wait 2 minutes because that means they have to keep a queue and they have to keep track of everything. Then they have to have a timer. What they want to do is fire a request in, and if they can't get the answer back straight away, i.e. the proof ID, then fire a request straight afterwards to get the proof ID, which is that's all fine. And depending on the underlying blockchain throughput, sometimes that works, sometimes that doesn't. But at least it's an easier model for them to stick a 1 second, 2 second delay in and retry a few times than having a 2-minute queue, because that 2-minute queue could be thousands of requests. Technically not. Technically easy, but it's still quite messy. My ideal blockchain would be basically super fast, ultra fast, with regardless of the existing chain size, with sub-microsecond block additions, and with essentially an unlimited block size. That would be great, but it's not going to happen, I don't think, because if it did, everyone would be using it, and it then wouldn't be able to do that. So,
and just a technical, you never see that. You never see that happening. That's just.
I only see that happening with private chains.
Okay.
And that is the one nod that I would give to private chains as being superior. You can control the you control their throughput, their pace. If we know there's only 5 validating nodes, then great. We know that that's going to be quick, especially if we control 2 of them, for example.
Yeah.
But with the public chains, and I much prefer public chains over private ones because of all the benefits of non-repudiation and immutability that gives. We have to accept, I think, that that's never going to happen. But having said that, we've deliberately built both models so that, it just depends on the underlying technology. It depends how people want that to be.
Okay. I'm going to ask you this question. I'm not even sure what I'm asking you. So it talks about key success factors. What are the supporting factors in the successful evaluation and integration of the blockchain technology?
Good question. Yeah, how's that mean? Supporting factors in successful evaluation. I suppose it's so maybe what we were talking about. I suppose it's sort of answering the challenges. So when we, maybe I'll turn it around ever so slightly to make it easy to answer. The capabilities of the underlying chain determine, for example, which model we can use. So if we have to have a delay before block creation to keep our API speed up, then that determines 100% that we need to give a transaction reference back immediately. And we keep a data store which basically tracks that transaction reference to the blockchain proof ID. Which means, furthermore, that anyone who wants to do that check has to come to us with the transaction reference before they can then go to the chain to do the blockchain reference itself.
Yes.
So so that getting the proof becomes a two-step process. So that's one factor which determines, that's a code flow switch, but it's absolutely determined by that. It doesn't necessarily mean it's not successful at all, but it's a determiner. Now, for the fully on-chain transaction-based model, that's not necessarily a problem, because if you're already doing smart contracts invocations on-chain, then you're expecting to have to wait for the whole chain update mechanism to take place before anything works anyhow. So that only really applies to the off-chain proof recording mechanism, the first thing I said. Integration-wise, actually, we've had no great issues. There's an awful lot of differences in the APIs, and something like, is it Overledger or some of these overarching interoperability layers might make life very useful. And we're talking to Flare, who are doing something in that scheme. But again, that's just, we've spent the last 10 years building interfaces to 250 odd different business registers and banking registers. So writing interfaces isn't something new. It's something we're actually pretty good at. So as long as the code is structured in a decent way, that shouldn't be an issue. But it would be nice. It's going to be nice in about 3 or 4 years' time, when everyone has a fairly standard API, regardless of the underlying chain technology, which I fully expect to happen.
Okay. So in fact, just the last couple of questions, and this is kind of more sort of general advice and to entrepreneurs or small business owners. What in your opinion would be like what are the key skills or competences that like a small business owner or SME manager needs to identify and successfully integrate blockchain into their business?
You need, this sounds fairly obvious, but actually it's amazing how often it's not obvious. It's amazing how for something obvious it's not followed. You need someone who really understands the technology. Not someone who's read all about it. Not someone who's read the marketing slides and the Gartner reports. You need someone who actually genuinely understands it. You need a comp sci graduate who's doing a master's in it, or someone who's had the time to understand it, or a mathematician. Mathematician would be ideal, because the most important thing is not what it can do, in my opinion. The most important thing is what it appears to do, but actually isn't doing. And this comes down to, I call it the Harry Potter effect. This stuff looks like magic. Everyone thinks this stuff is brilliant and it's magic, and you get words bandied around like immutable and proof, and I use these words, don't get me wrong, I'm not saying that these words are necessarily wrong, but these are all predicated on a certain type of architecture. It's all very well having, say, a blockchain running on your laptop, but it's not worth a damn for anything. It's just nothing. It's just something slowing the CPU down. And I had a discussion with someone who said, "Oh, well, no, this is great. We're going to put all this data on chain so that we can tell if it's been altered, and you can tell if someone's trying to alter it, not if it's been altered." That's alarm bell number one. You're using the entirely wrong terminology. So, well, okay. So what's the split going to be on the validation? So right, they'll have 51%, and we'll have 49%. So okay, yeah, all right, fine. Who's this other one? Who's this other party in the 51? Oh, it's some third party, some company that we're paying, and we want to protect. So let me see if I've got this straight. You're going to put information on there to protect it, and you basically handed over control of that information, which you are responsible for, to a third party which no one else knows. And you are entirely trusting that third party to be above board without question, because it's your reputation at stake. You just handed your life over to that third party. Do you not realize this? But it's blockchain. It doesn't matter what it is. You may as well just give them your database files, because that's what you've done. I said, if I wanted to hack into your system and change the data, what I would do is quite simple. I would socially engineer the other party. I would go in and bribe them, get them drunk, whatever it takes. And I would go in on their 51%, change the data, and your 49% would go, oh yeah, you must be right, because you're 51%. And you would never know it happened, ever. So that is not, this is what I call the Harry Potter thing. People just, because everyone talks about blockchain as if it's all huge, great big public networks with millions and millions of validating nodes, that everything that comes with that structure comes for free. And it's just not true. I beg anyone who's thinking of doing this stuff, get someone who understands the technology to design you an architecture which actually makes meaningful use of it. Otherwise you may, I put it this way. So you're setting up a company and you want to do, you're setting up a database, and you're gonna have some code and a website, and you're gonna have a database, and it's all going fantastic. What's the first thing you do? The first thing you do is not go and ask some bloke off the street whether he knows all about databases. You're gonna go and get coders and designers and database experts, and they're gonna build you a system to your requirements. You need the experts on this. And just because blockchain is magic doesn't mean it's not perfect. It doesn't mean it's not breakable. It doesn't mean it's not hackable. It all depends on how it's set up. And I think the key difference between this and any other technology that we've seen ever really is that never has there been such a dependence on the actual implementation details of the system. I mean, you could implement a database and leave the doors wide open and people could come in and change it. Yeah, but that's not implementation. That's just being stupid. Blockchain is an entirely different category for this. It needs to be implemented in the right way. Otherwise, you've bought the illusion of security. You think you're bulletproof. And even worse, you don't have anyone who has enough knowledge to tell you that you're not bulletproof. And when it all goes horribly wrong, which it will do, you've got nowhere to go, because you just trusted the hype, which is basically told you that if you plug this box in and download this code, it's all going to be fantastic. And my biggest wish is that people just understand the fact that it doesn't work like that. Is it magic? It's highly advanced, mathematical, extraordinarily complex, but it's not magic. It's not unbreakable, but it's so complicated that most people can't understand it. Most people never will be able to understand it, but that's fine. You just need to find the people that do. There are enough people out there that do understand it to a good enough depth to save yourself from getting into trouble. So it sounds doom and gloom. This is why my LinkedIn profile says I'm a realistic blockchain enthusiast.
Yeah.
I love blockchain.
Yeah.
I don't believe it's going to save the world. I don't believe everything will be running on blockchain. I spend most of my time telling poor, unfortunate people, your business idea might be great, but it's not a blockchain idea.
Yeah.
Sorry, but that's the truth of it.
You know, I was just thinking, because it was fascinating as you were talking. I'm just thinking, I said, this is not what they want to hear. So it's not like, you know. And then so it wasn't. In some ways, you've kind of sort of encompassed my final question and your answer to that last question. What advice would you give a small business owner or manager that wants to start a business using blockchain?
Yeah, I was thinking about this, and I was trying to not sound negative. My initial advice is don't. But the reason for that is not don't. It's don't because the question is the wrong way around, and I'm not. You know, I don't mean to be rude about the question. Yeah. If I rephrase the question, what advice would you give an SME manager that wants to start a business using a database? Suddenly, the question actually kind of doesn't make sense. but my advice is find a problem that your business needs to solve, and then figure out how the unique capabilities of blockchain can be used to solve that problem. If you look at it the other way, that's fine. Find a problem for which only blockchain capabilities will suffice. Absolutely, go for that. If it needs to be immutably proven, if it needs to have some kind of unique proof, so in the NFT model, I'm struggling to think of the phrasing. If you need to be uniquely able to say, this happened at this time, great. Basically, if you need something which is all the blockchain things, then great, absolutely. Do it on blockchain, do it natively on blockchain, because then you won't have some of the hassles I had. And you know, I talk to NFT marketplace people, and that sort of thing for me is the perfect use case. But even those guys, we need to remember that blockchain is just another tool. It's another tool like a database or an application server or what have you. So I see far too much focus on people who literally just want to do a blockchain business without a business.
Yes.
And I, you know, they say, oh, well, I've got this thing and this thing. And I, you know, I do a few panels for blockchain awards for good ideas. And my continual question is, what makes this a blockchain problem? Why is that blockchain? Why isn't that database? Why isn't that, you know, a flat file? Why isn't that something other than blockchain? Because using blockchain because it sounds fancy and it's blockchain, you can get money for it, is not actually a good reason, because if that's the case, then you probably don't have a valid business case for your business. And if you don't have a valid business case for your business, it's going to fail anyway, regardless of what you use.
Yes.
So I'd like to tell this story. My dad showed me, kind of forgot what it was now. No, which way around was it? Showed me a hammer. This is yonks ago, obviously. So what's this? So it's a hammer. I said, no, it's not a hammer. Okay, well, it's a hammer. No. So this is an electrician's screwdriver. And he's an electrician. So the joke was, you can put a screw in with a hammer. And you can. It works perfectly well. And your screw's using as a nail. It's not a good idea. And it's not going to hold forever. It's not going to be anything like as good as using a screwdriver. But you can do it. And it's one of those lessons where I think, yeah, just because something can do it doesn't mean it's the best way of doing it. So my advice is, if you found an issue for which the unique capabilities of blockchain work, then absolutely 100% go for it, and go for it properly. Don't, you know, do it all natively on chain. Stay as much on chain as you can. If you don't have that particular, because if you found that scope of problem, then you're already in sort of the new world of problems which can only be solved by blockchain style technologies. So don't go at it half-heartedly, go for it. If you can't hand on heart say that this can only be solved by using blockchain technologies, then consider the business case first. Consider how you can augment that business case using blockchain technologies. But don't be afraid to turn around and say, you know what, I can make a good business out of this, but it's not a blockchain problem. In the same way that you can make a good business out of doing stuff with flat files when you need a database, or vice versa. I see too much stuff which is, I must use blockchain. No, you must solve a problem. You must use the correct tools for that problem. If one of those is blockchain, then yeah, great, you're in the right space. If one of those isn't a blockchain, either do something else, or do that and find a different problem, or augment the problem. And that's, to be fair, that's exactly what we did. We started off with a solution which still runs, you know, still database based, absolutely. But we've augmented it by discovering a sort of sub problem for which blockchain is the only technology which is reasonably capable of fulfilling that requirement. So it can be done. You don't need to go the whole hog, but if you do find something that fits into that space naturally, good luck to you. Absolutely. And let me know. I'd be fascinated to hear about it.
Very good. That's been super, Peter. Thank you very much.
Welcome. Thank you.
Yeah, it's been really interesting, fascinating. And I'm kind of what I propose to do now is we'll sort of be I've recorded this into, so based on that, I'll kind of draw up the profile and fill it into the format they require. I'll run that by you first, just so for your approval on it, and then submit it to the rest of the partners, to their, or it's a Dutch organization is kind of compiling the good practice compendium, and
Right.
then hopefully publication probably in August time. And of course, I'll send you a copy of that whenever it's out.
Look forward to it. Great.
That's great. So thank you very much, Peter. That was really interesting. Thank you again.
Pleasure. Cheers. Thanks very much.
Thanks, now. All the best.
Bye.
Bye-bye.
Cheers.